with occupancy rates, just to understand those. What did you see pre and post? Obviously, pre, you were saying it was very high.
Yeah, so
pandemic and coming out of the lockdown, what are you seeing?
Yeah, so pre-COVID, most student housing developments, there's always been the odd exception, but the vast majority of operational student housing is operating at about 97% occupancy in the main letting period. And that main letting period would typically be September, October till the summer. And then the following summer, either the students can opt to stay in over the summer, or those rooms are let to others, normally students who've decided they want to stay in for a longer period. So occupancy pretty much across the sector. And you know, when most people are doing valuations of student housing, they're trying to adopt typical occupancy levels. And 97% was pretty much the norm as to what the term time, the average letting period occupancy level was. And then over the summer, you'd adopt a much lower occupancy because the summer, in most cities, you know, you might get some cities, some students in. If you're in Edinburgh with a festival normally, or if you're in London with lots of tourists and so on, then actually, you know, language schools, you might see a higher occupancy in the summer. So we've gone from 97% occupancy to right now, as students are still arriving, but most have now arrived. The majority of developments are around about 80% occupancy, which is clearly a lot less than normal. On the plus side, it does give the operators some potential to do some quarantining as and when required, in terms of moving students that are infected into some of those empty rooms. And I think most investors have taken the view that they will continue to have that lower level of occupancy for the next 12 months or so. People who are buying student accommodation at the moment are nearly always asking for an underwrite of occupancy levels to effectively guarantee a normal level of occupancy. So it would be quite normal if you're buying a student housing investment to demand a 97% occupancy guarantee for the next 12 months. And the investor and the seller will normally be quite happy to do that. They don't want the current 80% occupancy to be assumed to be the long term. The purchaser will take a view that this is probably a temporary thing, and at least it helps them to top up their income level so that they're able to get an appropriate return for the investors even during that first disturbed year.
So they're not paying asking price then, they are asking for some sort of discount is effectively...
Well, no, interestingly, I think, that we had expected to see some significant discounting because of all the bad press like the sector's been getting. Actually, the discounting has not been on the level that we would have expected. And I don't want to sound like the cheerleader for student housing. I mean, I'll tell you the bad stuff as well. But the pricing issue at the moment, the cost of that occupancy guarantee has to be put in place, and there is an associated cost with that. In terms of the multiplier on income, or the yield, as we would say in property terms, we are not seeing any significant change. Probably what we are seeing is that transaction I mentioned to you back in March, the £4.7 billion one, that was done at record levels. And we're not seeing transactions at that level. We're seeing transactions probably at where we were last September, when they were pretty healthy, strong transaction levels. But that absolute sort of peak of the market pre-COVID isn't being replicated at the moment, and it may be some time before we get back to that.
What was last year transacting at roughly, just to get an idea on comparisons?
Volume levels, or
in terms of, you were talking about that transaction of 4.
Yeah, so I mentioned that last year there was about 3.5 to 4 billion pounds of student housing transactions, mostly in big portfolios, and the PAR for the last 7 or 8 years has been around about 3.5 billion. Okay. This year is distorted because of that 4.7 billion transaction early in the year, and probably this year we will get to 5 billion.
Oh, really?
It would have been a poor year had it not been for an extraordinary large transaction back in March. So it's not on its feet. The people are seeing student housing, excuse me, as an alternative investment sector, the sort of investment sector that actually is a safe haven. And you might say, well, it doesn't sound very safe, Philip, because there's all these issues with COVID and so on. Well, yeah, there is that. But most people are taking the view that isn't forever. That people, when it's time to go to university, they don't tend to put it off for 2 or 3 years. They tend to go when you're 18 or whatever. Many families will make a lot of sacrifices before they say, we can't send little Johnny to university. The big issue, I think, for the moment is the domestic students have largely returned. The international students is another matter. We've seen very strong levels, as you said in your introduction, of students from China and India, and actually those levels are still very strong this year. But the problem for the operators at the moment is that there's a lot of international students who've paid their deposits but haven't actually turned up. And they are not sure if those students are really going to turn up. And there has been, both in the higher education sector and in the private PBSA sector, I think an over-reliance on international students. Now, international students are very attractive for universities. They pay 2 or 3 times the fees of a UK student. And for the private sector operators, international students tend to pay the premium rents as well. They tend to go for the better accommodation. So if you went to London and looked at most of the premium student housing developments, about 70 or 80% of the beds would be occupied normally by international students. The British students, bless them, are rather being priced out. What really happens is that the international students book online from overseas because it's by far the most convenient way to do it. What you don't want to be is an international student turning up in London, a city you don't know, suddenly trying to find a rented flat and having to take an Uber or whatever all around the city to find a rented flat. It's just not practical. Plus, you want to have a safe environment and you want the reassurance of it being a managed, safe environment. And you probably want to meet some other students of your nationality and indeed other nationalities as well. And so that's why the purpose-built student housing sector has actually created quite a significant community within these buildings. They are communities. And that's been very attractive to a lot of international students. So we're waiting to see what's going to happen with international students. My view, and that I think of many of my colleagues and investors around the world, and indeed the universities, is that this year is going to be extremely disrupted as regards international students. Either they can't travel, or they're reluctant to travel, or they're reluctant to spend the money on what might not be a normal student experience. And if you are going to study abroad, it's going to cost you a lot of money. And so you want to be confident that you're getting value for money. So the operators and indeed the universities have this year really decided to focus on domestic students. And it's probably somewhat overdue because the sector, it's not right to have so much focus just on the international students and to neglect the poor old British students. Sorry, I digress, as ever.
No, that is fantastic. You're answering all my questions. So this is
brilliant. Sorry, I can make some more up if you like.
Excellent. Thank you so much. I hope you enjoyed that and don't forget to subscribe. We'll see you soon. Thank you.